Hello and welcome to a brand new episode of Smart Money. Now today on Smart Money, we're going to talk about the big opportunity in the mid-cap space. Did you know that if you map the last 5 or even 10 years, the mid-cap index has actually outperformed both the Nifty as well as the small-cap index? And there are, of course, many market leaders in the mid-cap space. So I have with me here Aashish Sommaiyaa of WhiteOak Capital. He's the CEO there. He's joining in to talk about how a long-term investor can perhaps capitalize on the big growth that we're seeing in the mid-cap arena. Ashish, thank you so much for joining us. I think it's after a while that you're here with us in the studio.
Thank you. Thanks for having me. It's my pleasure.
So, I want to start by talking about what the opportunity landscape currently is in the mid-cap segment, because it is a bit of a treacherous time, right? The market is very volatile. We are perhaps heading into a recession as well, as far as the US is concerned. At such a time, does it make sense to go out there and invest in mid-caps?
No, see, it's clearly, if you ask me, small and mid-caps, I mean, for a moment, if we club them together, clearly they are the ones with, much more volatility. I mean, a much larger amplitude in terms of the pluses and minuses and the swings. So from that perspective, if somebody says that equity is for long term, then clearly within that, on a relative basis, the outlook for mid and small cap has to be even much longer, right? But if you ask me the current juncture, I mean, to the extent that small and mid caps have underperformed large caps in the recent times, so that definitely is always a better time to jump in. Like if you look at in the last 5 years, say 2018 beginning, clearly a bad time to jump in. But let us say after that, mid caps underperformed large caps quite significantly for at least 2.5 years. That was a good time to jump in. Till August 2021, mid caps again, they were leading large caps. And now in the last 9 to 10 months, again, mid caps have been trailing large cap. So whenever there is significant underperformance vis-a-vis the broad market or vis-a-vis large caps, I think that's always a good opportunity, provided you are constructive on the markets, right? Because all of this is relative.
It's subject to, the market's moving up, right? Only the overall market moves up, then mid-caps.
It's all relative, absolutely.
But what's the opportunity landscape looking like now in the mid-cap arena?
See, I think we are at this juncture in the markets, or we are at this stage of evolution. Because if you see the construct of India, if you see 2 or 3 things. See, one is obviously it's known that we are an emerging market as far as global references are concerned. Within that, of course, we're a huge country, like 140 crore people nearly, but only $2,000 per capita income. And thankfully for us, if you look at IMF data, if you look at trajectory of various other emerging markets over a period of time, thankfully for us, there's a lot of data which actually says that when countries traverse levels of per capita income, then one by one, certain sectors, they start to become more material and they kind of come of age. So, for example, there's data to say that when a country crosses $5,000 to $6,000 per capita income is when auto, transportation, recreation, electricals, white goods, all these things become really big. Now, just to put that in perspective, in India, the largest quick service restaurants, hotel chain, tire company, the leaders are still mid-caps out here. So that's one thing to keep in mind, because we're at the stage of evolution where probably in the next 10, 15 years, a lot of things will come of real world, global scale in that sense. Whereas right now we're like tiny. The second thing to keep in mind is that a lot of discussion about export orientation, manufacturing, migration from China, plus a lot of reforms, formalization, GST. So if you talk about reforms and if you talk about some of these emerging market, relative movements, China, Vietnam, India, manufacturing movement, etc., all of those things are in the mid-cap space. Like for example, if you take the government's PLI, the PLI applies to say textiles, auto ancillaries, it applies to electronics, white goods manufacturing. Everything of the PLI arena all happens to be in the mid and small cap.
Actually, we have a very helpful chart right behind you if you'd want to turn around and look at it. So this is the stock categorization, right? I mean, if you look at it, the market cap below 16,440 crores, there are almost 750 stocks. And the mid-cap arena between 16,440 and 47,000, there are 150 stocks. So tell us, how does one identify market leaders in this space?
So, for the purpose of this discussion, now, see, it's very clear that for mutual fund investors, it's very well defined in regulation that large cap is top 100, mid cap is the next 150. Now, that's the regulatory definition. For a moment, if we were to say that, okay, let's say 100, next 150, and you take, just for the sake of discussion, take the next 100, 150. You know, more like from 46,000 to 16,000. Instead of that, let's say you go to 10, 12,000. Example, just because, you know, we are not talking here in terms of defining a scheme. We are talking more as an investment landscape or opportunity.
Sure.
So after leaving large cap, if you take the next 200, 300 stocks, what you will find is that the large cap index is actually mainly the big IT companies, the oil and gas, materials, you know, like metals, commodities,
banks,
large banks, right? But so that is, lot of it is global cyclical, lot of it is macro related stuff. But if you're a bottom up guy, you know, who's looking at industries, who's looking at trends of companies, then I think the rich area, you know, the happy hunting ground is actually the mid-caps and
the surface.
Yeah, so all the examples I gave you about sectors which benefit from production-linked incentives, sectors which benefit from the consumption boost which comes when our per capita income goes to the next level. All of that is somewhere in the middle bucket.
So let's talk about that middle bucket, which is the bright yellow bucket, right? Mid-caps, because you mentioned that the largest, the market leader in the tire space, which is Balkrishna Industries.
Yes.
The market leader in the hotel space, Indian Hotels. The market leader in
like you would say quick service restaurants like Jubilant Foodworks.
All of them
till
are
very
mid-caps.
recently Page Industries.
Yes, all of them are mid-caps. So tell us, how does
Voltas, for example.
Okay.
So obviously they're not recommendations, but just the biggest refrigeration and air conditioning company.
Yes.
So all of those are actually mid-caps.
So that brings us to the next question, right? How do you identify market leaders in the mid-cap space? These are, of course, the companies that are well known. But what else?
But, you know, look at it this way, that don't you think, like I'll give you just one statistic. I don't know the latest number, but till very recently, so India has, say, about 250 million households, which is, say, 25 crore. So if I just throw a question at in general, that how many households do you think have air conditioning in India? I don't know the latest number. It was as little as only 3 million.
Okay.
So we're not talking number of air conditioners, we're talking households, right? So 3 million out of 250 million. Now just look at it this way. I'm not a big fan of top-down investing, but generally if you chanced upon this broad brush, see, a lot of times the broad picture is what gives you the lead, and then you dig deeper, right? So as a broad statement, if somebody says that there is an air conditioning and refrigeration company which is the leader in India, 80-year-old company owned by Tata Group, and still it's a mid-cap. And where is the penetration level of white goods in India? And what is ahead of us in the next 5-10 years? So these are the kind of things which will give you a very good lead that, okay, what to then dig deeper into. And then if not the leader, the second best guy, the third best guy, you have to do, you know, bottom-up homework. But a lot of leads get thrown up when you find, you know, that what are the growth pockets, like, you know, when per capita income rises, when regulation, say formalization now after GST. So which industries are going through consolidation? Till some time back, I'm sure even Titan was a mid-cap, right? But it's a biggest beneficiary of consolidation and market getting formalized.
So, you know what, let's do one thing. Let's get all the market leaders on the screen, right, in just a bit. So, now let's go one by one. So, I'm also a firm believer that if you're in it for the long haul, you better stick with the market leaders. So, the largest tire company is a mid-cap, which is Balkrishna Industries. The largest hotel company is a mid-cap, which is Indian Hotels. The largest, that's the hotel chain for you. Now, okay, you know, we'll keep getting those market leaders up on the screen. The largest industrial bearing company, Schaeffler. What do you do when a market leader is going through a bit of a challenge? So Jubilant Foodworks, for example, right? They had some management issues in the middle.
Yes,
There's a lot of competition as well. Balkrishna had raw material costs surging. Do you keep the faith because they are market leaders, or do you be agile and shift gears based on what's happening currently?
So, you know, see, I mean, there is always this, I mean, we're not getting into theory, but there is always this thing about whether you would do it yourself or go to a professional. So whether you do mid-cap stock picking yourself or go to a mutual fund or a PMS guy. So keeping all those discussions aside, in generally, as far as your question is concerned, I would just say that if a market leader, you know, every market leader, definitely there will be macros which will create headwinds. Sometimes, like you said, management changes. Now, is that macro development or is that management change enough to throw them off track? I think that is the only.
What do you feel?
I don't think so. I don't think so. See, I think that some of these companies, typically, you know, mid-cap, they are mid-cap purely because of the industry being slightly underpenetrated. But in their own right, their leadership
They're large
organizations.
companies, yeah.
And I don't think the leadership boils down to a raw material cost advantage or just one person who's a CEO. Again, I'm repeating, they are mid-cap purely because the industry is small, but they are leaders. So a lot of the quality aspects of these companies, whether it's their management, whether it's their differentiators, strength of brand, a lot of those things could be as good or better than some of the large caps.
Yes.
It's just that the sector is small, so the leader is small.
Yeah.
But when the sector grows, you just need to be sure that they have in it for them to maintain the leadership.
And the pie is anyway growing, right? I mean, two cases in point, and we should just get them on the screen. Page Industries and Indian Hotels, right? The stocks have been hitting new highs. The pie is, in general, the apparel business is growing, industry is growing, and hotels, as we know, has come back in a big way. So what do you do if these stocks are sort of expensive, I mean, compared to their peers? Do you still stick with them, or do you sort of, move to, say, second rung or third rung players?
So, look, we are professional managers. So, if you ask us, our answers sometimes could be different. And within professional managers also, there could be different answers. But let's just put it this way, that if you're a proprietary investor, if you're an individual investor, you might just hold it for the long haul. And then some of these pricing related, issues, because stock prices sometimes really shoot up and then they're discounting more than a couple of years of earnings, which means that eventually there could be flatlining or a price correction as well. So if you're a proprietary investor, if you're an individual investor, you might just want to hold it. But guys like us, we have to beat the benchmark consistently. So we cannot live with long price corrections, and we cannot live with long sideways or time correction kind of moves. So we might want to kind of take profit and be cognizant of the fact that we need to preserve relative performance. So the answers for us or considerations for us might be different from a individual investor. But I would generally say that to the extent that we are paid to outperform and paid for relative performance, we would be kind of price conscious.
Don't say paid for relative performance. You guys are paid for outperformance.
Yeah, that's what I meant. Outperformance over the index. So we definitely have to beat the benchmark. So we better be conscious.
Okay, so this is my favorite part, right, where we compare data, hard facts. I want to know, how has the mid-cap index returns been compared to, say, large caps and small caps over the last maybe 5 years, 10 years, 15 years? And I do have a plate here, so if you want to refer to that, please go ahead.
Yeah, so see, this is where I think most people, I mean, if they dwell on this data for a moment, most people would be surprised, because a lot of times people would have expected that the small companies, see, theoretically people say high risk, high return. So it will not be totally out of order if some people thought that in the long haul, small cap index might have done much better than mid cap. But here's the problem. The problem is that the small cap index, the universe is very, very big. A lot of accidents, generally a lot of governance issues, where you said, leadership fails. All of those things, they typically tend to happen in the small cap space a lot more.
And they get affected, I think small caps get affected more by disruption, technological disruptions, etc., a lot more than mid caps.
And lesser probability that an industry leader is a small cap. Well, I can think of some examples there also. But the point is that mid caps, like I said, a lot of them are leaders. So their management quality and a lot of the other quality parameters might be like a large cap, but you cannot necessarily extrapolate that to the small cap space. So what is interesting about the data clearly is that, and this is going to be a surprise for a lot of viewers, which is that the mid-cap index has outperformed the large-cap index and the small-cap index on every time frame, and you can see almost like by a mile. And even if you were to put up the whole market, which is Nifty 500, you will find that mid-cap has even outperformed Nifty 500.
And look at that, the Nifty 100 in 10 years has gained just 13.4%. As compared to that, it's a big outperformance by the mid-caps, right? I mean, one wouldn't have expected it. Even I was quite surprised when I was putting the table together.
I'm quite sure that, if somebody says that there is, let's say, you're showing this as of 30th June or 31st July, people will be surprised to know that even if I know for a fact that even if you took rolling returns, which is that instead of a point-to-point data, if you took, every day you saw what is the 5-year return, and then you compared the averages, you would still find that mid-cap has done better than Nifty 100, small cap, as well as Nifty 500.
Okay, well, on that note, we're going to take a short commercial break. Very interesting conversation with Aashish Sommaiyaa of WhiteOak, but don't go anywhere. We'll be back in just a bit. Welcome back. Thanks for watching Smart Money on CNBC TV18. Today we're speaking to Aashish Sommaiyaa of WhiteOak about the opportunities in the mid-cap space, especially the mid-cap market leaders. And very interestingly, if you map the last 5 or even 10 years, or even 15 years for that matter, mid-caps have outperformed in a big way, outperformed both large as well as small caps. But Aashish, I just wanted to understand currently what situation are we in as far as either regulatory or policy tailwinds are concerned? What could drive the mid-cap performance in that sense?
Yeah, so we did make like a brief mention in the earlier part of the conversation, which is very important, that if you see post-COVID, and I personally, if you really ask me, it's not just post-COVID, it's even demographics and it's even the macroeconomic construct. But post-COVID, there is an accelerated discussion about manufacturing being diversified, supply chains being diversified, and a lot of industries moving from China to say countries like India. There's data to say that almost 35 to 40% of that moves to Vietnam. But Vietnam is a different case, because if it's a Chinese business diversifying, they might choose Vietnam. But as far as multinational companies are concerned, they are choosing India. So 20% of all manufacturing which moves out of China comes to India. And that's why the government obviously has announced these PLIs, right? So all the PLI announcements are related to auto ancillaries. They're related to electronics components, white goods, EV batteries, many of those like, pharma APIs, chemicals. Now, all of those, that's a big change in policy. The government is really incentivizing. We have 15% in tax for new businesses. On top of that, there are these PLIs, which are like cashback kind of thing. So all of these sectors which I named and subsectors, they are not large cap. There's no large cap companies in these sectors. Fully populated by mid-cap and to some extent small cap. So that's one policy tailwind. The second thing is everything related to our regulations and governance. So if you see consolidation because of GST, increased tax compliance, more boost to the, hit out on the parallel economy and more move towards formalization.
Actually, more the need to invest in mid-caps and market leaders, right? I mean, increased tax compliance is something that sometimes small companies can't get up to speed with. So, and even consolidation.
So all the market share gains because of consolidation, a lot of those things, if you take these whole sectors which are related to home interiors, like wires and cables and electric fittings and fixtures, if you take tiles, if you take paints, right, lot of the white goods and consumer related stuff. So wherever it is formalization, consolidation, PLI, government policy, lot of those things are happening in this space which happens to be populated by mid and small cap companies. Because like I said, the large cap index has a lot of big IT companies, global commodities, cyclicals, metals, oil and gas, those kinds of things. So that obviously is not driven by what we are discussing.
Okay, so give us some examples, right? I mean, which are the mid-cap companies, and I want to give that disclaimer right away that these are not buy recommendations, but which are the mid-cap companies that are not just market leaders, but have the potential to become large caps over the next 5 to 10 years?
So this is the holy grail, right? Because everybody invests in mid-caps in the anticipation, like, all the examples I'm giving, whether I speak of per capita, whether I speak any of these things. Ultimately, the point is that these industries or these sectors will come of age, they'll come of scale, and a lot of the mid-caps will eventually become large caps. So if I can give you, I gave you 2 examples. Let's say, for example, there's one outlier, right? Say L&T Infotech, till very recently, used to be upper end of small cap or just a mid cap, and it's become a large cap. So there are very few examples that in a 5-year holding period, a small and mid-sized company actually becomes large cap, right? And we did some data crunching, which actually says that if you hold the mid-cap index, like a chemistry lab experiment, you hold the mid-cap index for 5 years and just go away, come back 5 years later, 40 to 50% of those companies will remain mid-cap, but give you a decent return. There are still 15 to 18% of the companies which have a track record of moving from mid-cap into large cap and giving outlier returns. So what are these examples? Like say, for example, if you see, I just mentioned to you, like Titan, for example, was a small company or a mid-cap company and then became large. Now, if you look at it in today's terms, again, very difficult to forecast, but if you see in today's terms, a lot of the chemical space, which was small cap and has now become mid-cap. But if you look at it at a 5-7 year horizon and whatever we're talking in terms of consolidation or manufacturing and exporting, then a lot of those could actually, that space. The second one, I think, is a lot of companies in the consumer discretionary space. We discussed some examples, right? But it's not necessary that all of those would get stuck in time at 30-40,000 crore market cap.
So like, which ones are you?
Like say, for example, a Voltas I give you, I mentioned to you. Or all the market leaders we mentioned, like say Indian hotels or, you know, quick service restaurants, etc. So there's no reason for a country like India, which is $2,000 per capita, but 140 crore people. There's no reason why these companies would remain. I can give you another example, like say VIP Industries is one of the largest luggage makers, is the largest in India, but not just India, also one of the largest luggage makers all over the world. If I'm not wrong, is still a small cap company. I would be doing a disservice.
But very hard during the pandemic.
Yeah, of course. Yeah, I mean, see, that is a situation specific thing. But I don't think that's going to be forever. And I would be doing a disservice if I don't give you examples from my industry. So
go ahead, please.
Yeah, so you know, I mean, one of the most respected names, you know, like say for example, HDFC is listed. They are a mid-cap company, and you know that the asset management industry has like a long way to go. Whether you speak about digitization, capital market adaptation, savings, and investing. So, I mean, you know, if you see in India, next 10 to 15 years, a lot of the mid-cap space is going to really scale. And it's evident in the data.
Yes.
My guess is that if you did all this data crunching 10 years back, I don't think mid-cap would have been the best performing benchmark. But in recent times, it's turning out that way. And my guess is it will sustain like that for the next 10, 15 years, purely because of the stage of evolution that we are in.
And even if you look at it, the 15-year, you know, if in the last 15 years, it's what, a 13% gain that the mid-cap index has given. Not bad at all. I don't know any other asset class that will give you a 13% return, unless you're doing stock picking yourself and you're exceptional at it. But if you had put your money in just a mid-cap fund, right, over the last 15 years, a 13%.
Yeah, of course, we are using indices for ease of discussion, but you know, professional managers or anybody who thinks that he's a stock picker should ideally you know, do better. My guess is that this data wouldn't have been like this if you did the same data crunching 5-6 years back. So I think something has changed in our construct in the recent few years because of all the tailwinds we discussed. And my sense is it's just the beginning. It will remain like that for times to come, at least foreseeable future.
Okay, on that optimistic note, we'll let you go. Ashish, thank you so much. It was a very informative and entertaining discussion. Thanks a lot for being with us on Smart Money. With that, it's a wrap. Thanks a lot for watching. We'll be back again, same time, same place next week.